Welcome back to Global Business Europe. Now, you might not have heard of it, but the drink by Joe is a big deal in many parts of the world. For the first time in 6 years, Moutai, one of China's top liquor brands, has raised the price of some of its popular products by 20%, from around $132 to $160 a bottle.
Moutai shares surged 9.8%, the highest jump since 2021 after it reported strong Q3 earnings. Goldman Sachs estimates the price rises will add an extra $478 million to the company's profits next year.
Brendan Ahern is Chief Investment Officer at investment management company KraneShares. Good to see you, Brendan. Welcome to the programme. So Moutai, really a huge brand within China, and it's put its prices up now. Why?
Well, it shows that the love affair that China's drinkers have with the fiery alcohol that the company produces certainly shows the strength of their brand. That they have this pricing power to pass along a price increase. But it also shows, I think, that the rumors that the death of the Chinese consumer have been greatly exaggerated, that this is another clear indication that China's economy is continuing to rebound, albeit incrementally. So we think it's a great company to be invested in, which we are here at KraneShares.
So it sounds like people are still buying Moutai then, but are they buying it to drink or are they buying it to invest in?
Well, certainly maybe they're toasting the recently announced Biden-Xi summit taking place at APAC. But I think, it shows that as we head into the holiday season that this price increase will certainly play into their Q4 revenues and net profit, which have already been quite strong, as Jamie mentioned. So I think it's pricing going into a seasonality of the holiday season, but also as investors, it's a great time to be invested in Kichwa Moutai because of the resiliency and the strength of the company, which is up year to date.
And investors showed they were keen on this announcement, didn't they? Share prices went up on the back of it. Why are they particularly keen on this price rise?
Well, I think that they're going to pass this price increase will increase revenue. It certainly also pass through to increase net income as well as the earnings per share growth. So I think over the next several days, Robin, you're going to see analysts like Jamie mentioned, the Goldman Sachs. They're going to be redoing their models about increase. So you're going to see price target increases. You're going to see further recommendations from analysts. And I think for investors like ourselves, we've already been a beneficiary. The stock is outperforming the Shanghai Composite by about 4 percentage points, and it's actually outperforming its main rival in China, Wuliangye, by quite a significant margin. So for us here at KraneShares, we've been a big beneficiary, a big believer in the company, and a beneficiary of its performance.
Brendan, good to talk to you. Thank you for joining us. That's Brendan Ahern, Chief Investment Officer at KraneShares.